Hey everyone, welcome back to Your Money Your Life podcast. We're on episode 337 of the pod. Before we get into our episode, make sure you like, subscribe, five-star rate and review this podcast. We do this every week. Thursdays, usually the episode drops. Actually, I'll be on vacation next week, so I'm trying to pre-record a couple of episodes so that you get them for the next 2 weeks while I am out on vacation. Let's jump into this week. There's actually a little bit to talk about. We'll talk about a little bit of investing, talk about some of the themes that you want to follow when you're looking at investing, and just in general, what's going on. We've been tracking the market, tracking what's been going on. And so you're going to get a taste of that as well via our roundtable. Let's look first at the past performance of the market. Last 5 days have been a little bit higher, almost got to 1%. We're about three quarter of a percent higher in the past 5 trading days. Over the last month, it's been about flat. And look at the volatility in the last month. Again, summer usually slow, a lot of traders, a lot of finance going on vacation. I think they're calling it Euro summer for everyone, but just generally a slower time. There's not a lot going on in the market. But if you go back 6 months, you're at 8.61% appreciation in the S&P 500 index that we're looking at, the Spider ETF. And then year to date, from the beginning of the year, we still have a 9% gain. That's again a solid year. I said, and maybe a little bit less than double. We've been getting double digits consistently. And so this is another year where we're seeing solid returns so far. We're a little bit over halfway through. And so again, that's just the long-term investing. There were so many things that happened this year. Look at the volatility. You saw the March, all those different things that happened. The Iran, conflict started, oil prices, different things, but we're still trugging along in the market. And so that's a testament to longer term investing and why you should practice that. If we want to go specifically at different actual securities, we can look at BTC, how that's been tracking so far. It's been again still rough. We're in the bear market for crypto. Again, we said later this year maybe we'll see that pull, that appreciation again. Buyers come in October, November timeframe. If you look at a chart, the cycles are repeating itself. The same cycles are repeating itself. This is it's almost looks like a head and shoulders chart for those day traders. Um, and you will see again appreciation because you see the same themes and cycles in crypto. They just get larger and larger, these cycles of returns. And you'll see that again. So for the long-term holders, if you're looking specifically at just just looking at high growth tech, let's look at QQQ and see how that's tracking so far. Again, 6 months, a lot stronger, a little bit stronger than just the general market because it's a heavy growth oriented index. 6 months, you're seeing 13% year to date, 13%. With the past month taking a little bit of a beating, down almost 5%. Past 5 trading days, up 2%. So again, just cycling through and showing different themes that is going on. Now, if we talk about current stuff, business updates, let's look at Tesla. Tesla and Google did have their earnings, so we'll talk more about them here in a second. But Tesla did miss, according to Wall Street. Their operating costs are rising. Their second quarter earnings fell short of what Wall Street was expecting as they contended with weaker vehicle pricing and drop in regulatory credit revenue. So remember, they used to have a regulatory credit that I think was started under the Obama administration that was giving them a credit for these EVs that they were selling. So they've lost that credit. That credit ended, expired, and it wasn't renewed. And so you're seeing them having some bumps in the road, but you know, let's see if it's affecting their trade. And I actually don't know how much it's affecting their um, pre-market trading. And we're going to get that answer here. And we're actually going to see that it is getting pretty hammered, down almost 8%, down 7.56% in pre-market trading after their earnings call. So not great. And the stock has been struggling actually. If you think of Elon Musk running so many different things, SpaceX, this, that, like Tesla's kind of almost taking a back seat that used to be the front seat. And so that could be also a tell. They did say Elon said they saw expenses grow faster than revenue as they ramped up their investments in AI research and development. It said they expect to start production soon at its Optimus robots in its Fremont, California factory. So that, remember those Optimus robots? He said he was going to sell that combined with one of their models of their cars for like $60,000, which is pretty good value if you ask me. But can you actually get that done? Operating costs, all these different things that's going to hurt earnings, as you see, and they're putting much, much money into AI and research. Like that's the theme here, for a lot of companies. Let's even look at Google. They said the same thing. Alphabet said they're forecasting capex for the year at 195 billion to 205 billion, and they warned higher numbers in 27. Their price guidance was 180 to 190 billion. So at the top of the new range, Alphabet could be the biggest spender in tech this year. So they're saying we're going to spend on AI research. Both companies, meaning Alphabet and Tesla, reported negative free cash flow for the quarter and told investors to prepare for higher capital expenditures. They both also reported better than expected revenue. So they're growing again. They're growing, but again, investors are looking at the total picture and looking at earnings as well. And if you're spending a lot, even if you're growing, it does affect the bottom line, as we know. And so these stocks again, but again, I see these opportunities when you're having negative news with stocks that are high performers, that are growing, that are industries that we know their products and services are going to be used more. Those could potentially be incredible opportunities for buyers as they're looking at a longer term picture. If you're looking at a longer term picture, not a short term blip, these present potentially solid opportunities for buyers that believe in these companies' stories. Um, Here's another story, another big tech company that's going to be actually IPOing soon, OpenAI. There was a breach with OpenAI. The tech world is on edge this week is after OpenAI blamed two of its AI models for breaching Hugging Faces, which I've never even heard of. What is Hugging Face? Internal systems. Experts say the incident shows that the even elaborate containment measures may not be adequate to protect against potentially harmful cyber attacks. OpenAI's models took hours to hack Hugging Face, a task that would have taken a human weeks. This is according to Bloomberg. So AI firms have faced higher scrutiny since June when the federal government forced Anthropic to temporarily restrict access to its latest model. So yeah, this is another thing with AI growing so fast. These models were able to breach another company's system, steal data, user information, if I'm not mistaken, and it went rogue. And OpenAI doesn't have regulatory guidelines where they had to explain and tell people that their models went rogue and attacked another system, but they did, which is a good thing. But this is not great that it escaped, and nothing was standing in its way to there was no guardrails to stop it or reining in to reduce the breakout. But that's again not a great thing when you're thinking about some of the risk of this fast growing technology with the AI is that, do these things go rogue? Do we have proper guidelines in place as far as, risk and controls within the companies, and then risk and controls from a governance standpoint? The government as well doesn't seem to have put anything in place yet. And so that's going to be something to watch for us all as we go forward. Speaking of more government, the FDA is investigating new outbreaks, Cyclospora, that's the stomach issue, with outbreaks with 72 cases. The Food and Drug Administration said it's investigating a new outbreak of the parasite with 72 cases reported and no source identified so far. This follows a huge surge of infections in the Midwest linked to lettuce from Taylor Farms. Interesting. So I don't know if anyone's caught this horrible infection. We actually had Taylor Farms lettuce, I guess, and I just threw that out because I heard that was the source of this incredible stomach infection outbreak. And yeah, the parasite is difficult to trace due to weeks long delay in symptoms and has sickened thousands of people in the summer across 41 states. So be careful, folks. FDA is warning you guys to be careful. The investigation is still pending, but just make sure you are careful with that. Let's go back to big tech because that's what mostly is important to talk about. Uber is slashing its customer service roles by 10% in AI push. I don't know if you guys saw this, but JP Morgan said that they built their own internal AI models, and they saw that they were able to reduce certain departments by 30 to 40%. And they offered these people new roles, most of them. Some of them were just let go. But Uber is now saying that they're able to slash customer service roles by 10% with AI. They look to simplify operations and embrace AI. This is according to a memo that was viewed by Bloomberg. The move follows a previous 23% reduction of its people and places division. Remote employees were asked to return to hub offices. pursuant with Uber's stricter return to office policy. Their organizations become too complex and siloed. This is wrote by an Uber executive. Layoffs attributed to 80 to AI adoption have surged this year. This is accounting for 22% of US job cuts. That's interesting. We're now at AI saying they account for 22% of job cuts. I suspect the number is on par, could be even, potentially more. But that's interesting. They're not the only company implementing. JPM also said that they were able to reduce some certain departments by 30 to 40% based on their AI models that they built. So keep an eye on that. Let's look if there's anything else interesting. We are seeing sports news. LeBron James is actually looking for his 24th season, looking for his next team. Miami and Cleveland seem to be the top choices. I don't know where he's going to go. I actually don't know. I haven't been following this too much. But that's interesting enough. You're saying Nuvo sue Lilly over misleading national GLP-1 advertisements. So you're seeing some stuff in the healthcare world. So a lot of different news, but again, quiet summers. These summers tend to be quiet with trading, with everyone busy, hopefully enjoying their summer. And that's how that kind of goes. But we want to talk in the roundtable about like understanding a little bit more about some of the things that drive the economy, that drive the stock market, that follow and indicate what's going on in the stock market. Let's look at M2 Money Supply. If you guys aren't familiar with M2 Money Supply, um, it's a tracking that consists of savings deposits, small denominations, less individual retirement accounts. So it's really just a track of money supply in the system. It's a track that they monthly track it, and it's the Fed tracking the supply of money within floating around in the economy and in our system, and some that they can use measures and tools, meaning the Fed, to increase or restrict the amount of M2 or money supply within the system. But it's something that's heavily correlated to how the stock market performs. If you overlay a graph of the MT money supply, and this is showing it increasing in November and then decreasing in January when we restricted and tightened and tried to rein in inflation, um, and then hitting a bottom and then flatlining and then starting to increase again. But this is over what, a 5-year period. So let's look at the S&P over that same period of 5 years and kind of track how that went. You could see a similar thing. 2022, market down, flatlining. 2023, kind of recovering and then just shooting up from here. That's literally the same thing I kind of showed here. Again, timing is slightly different, but here it's roughly the same thing, right? And so that's another tell of what's going on in the economy. Understanding and tracking the M2 money supply is actually really, really important. And we've kind of it plays a lot of different parts of the economy, not just the stock market, but you can see it's a very heavily correlated measure that a lot of people use because it's, again, if when there's more money floating around, people buy more things, more stocks, more different things, and inflation is also affected by this. But this M2 money supply lever is crucial, ladies and gentlemen, to understanding more about the economy, more about what's going on, and how things are affected. So keep an eye on it. It might be the first time you've heard of it, but you definitely want to keep it in the back of your brain. Folks, that is the Your Money Life podcast this week. Again, we try to make sure we do this every week. And we will, again, have pre recorded episodes more than likely, as I'll be on vacation for the next 2 weeks. But of course, we will see you very soon.